This is an example of the mechanical system we were looking at, the uptrend. So for an uptrend, so the market started from this low and went all the way up. This is not even so nice. Let me see what I can zoom in and get something more complex. Yeah, so I think this is better. So I'll start from the low here all the way up. Okay, all the way up. So this is an uptrend. All right. So let's see what happens in this uptrend. It started from here, went up all the way here, pulled down. They could not take over this high. So we don't consider this. This is just an intermediate move. The market push up. So the main trend is, if I'm to draw, these are going to be my point. This, hold on. The point I'm going to consider will be here to here to the low here. This low is lower than this. So this will be my interest. This will be my high. And then this high produced this low. It did not produce this one. This is before it. You're looking at what happened after. So after this high, it created this low. And then this high produced what? This high. And the market came down, but it's not good enough. So instead of we choosing this and that, we will choose the most highest here. Because when you choose here, the market came down a little bit here and went up here, and then came down and went up here. But this took over this low, so it violates the uptrend. So we don't choose these ones. This is an intermediate movement. The market came back, low here, push up here, came here down, and push all the way up, and then started going down all the way to this place. All right. So this is how the market moved up, uptrend. So I've drawn the simple way of the uptrend. Now let's go a little bit more complex. Let's go a little bit more complex and look at what really happened in between this. So this is a 15 minutes chart, and then we have this movement of uptrend. Now we are going to go a little bit more complex. I'm going to go to 5 minutes or 3 minutes, and let's see how we can draw the same trend, but we could see now what is happening in between, right? See that there are small moves in between, right? So you have to bear in mind that when you have 15 minutes, this 15 minutes chart, it means that every bar was developed within 15 minutes. Every bar here, one bar, it took 15 minutes for the market to develop this bar. Another 15 minutes to develop another bar. 15. So every bar is 15 minutes development bar, right? And then the market can break it down into more pieces, into more details. So when you go to a 3 minutes, where is the chart? It's missing. It's right up here. So what it means is that every 3 minute bar, if you take 5 of the 3 minute bar, 5 of them, like 1, 2, 3, 4, 5. 5 times 3 is 15, right? So you can find 5 different candlestick of the 3 minute candle in one 50 minutes bar. So you have 1, 2, 3 making up a 15 minutes chart bar. It's the same thing. So whatever that happened within 15 minutes have been broken down into pieces, into 3 minutes. So you have 5 of them in. The same way when you take 1 hour chart, every 1 hour bar, you should have about, if you want to look at it in 5 minutes, that means you have 60 minutes, right? 60 minutes divided by 5. That means you're going to have what? You're going to have 12 bars, 12 candlesticks making up a 1 hour, 12 5-minute candlesticks. When you add them all together, it will make 1 hour candlestick. So the market can break down small into pieces. So if you look at the chart, you have the weekly chart, daily chart, 4-hour chart, 2-hour chart, 1 hour chart, 30 minutes chart, 15. So it breaks it down, giving you details of what really happened. But the higher time frame It's just like a gathering of all the information into just one, or uh, to compress everything into what, just one bar. And then the lower time frame is a breaking of what, the higher time frame into small pieces. So we drew our trend on the 15 minutes chart. Now let's look at how complex it is when you go to the 5 minutes. So in the 5 minutes, what is really happening? The same chart, let's see what is happening. So we're going to start from the low here, the lowest part of it. Let's see what really happened. So I'm going to use a different color for the trend. Okay, let me change my color. I'll draw it, and then I don't know. Settings. How do I change my settings? Okay, I'm going to draw it. After drawing, I'll change the color so that we can differentiate. So what happened is that this market in the 5 minutes did something different. Okay, did something so different. What did it do? What it did was the market started going up here. Okay, I want to open it so we can see all the moves inside. All right, this is what is happening in this market. The market move here, came down, move up, came down all the way, not here, came the way all down here, and then move all the way what, up here. Or we could say it moved up here, but this up did not take over this, so we don't consider that. So we take we take this high rather. So we take this high because it's higher than this. It moves here, came up here, came here, came here, right? And then we have this down movement. Came here, down here, down here, down here, down here, right? And then it continued that way. We continue from here. So it went up, came down, went sideways. You see what it's doing? Came here, came down here, came up, came here, went down. So it's just having those intermediate movements. Um, uh, so move up here, came down here. All right. What am I trying to do? Now let's see something. I'm just going to use just this small move and then see what really is happening here. So let me change the color to a different color. Let me change it to maybe, let's say, green. All right. So what is happening? The main trend is what? We said the main trend is an uptrend, but we have small moves happening within what, the main trend on a smaller time frame. Okay. So the 15 minute is saying the market is up, but when you look at the 3 minutes, the market went all the way up and started going all the way down, right? So we have this movement, up movement, and then the market changed course and came down movement. So this is a downtrend, this is an uptrend, but it's all happening within what, the 15 minutes main trend. So the main trend on the 15 minutes, let's go to 15 minutes back. Let's see what I drew. Now see what we just drew. What do you see? Is that it is within the 15 minutes, right? Are you there?
Yeah.
Yeah, you see that the 3 minutes trend line we drew is within the 15 minutes. It's happening within the 15
Exactly.
minutes. Exactly.
Exactly.
So this is what we call the short-term trend in the long-term trend. So we have our main long-term trend on the 15 minutes, but we have a short-term trend happening within the 15 minutes. So smaller moves happening within the main move. So we have a main move going up, but we have a smaller move happening between. So That's how the market flows. That's how the market behaves. So if I'm to continue these small moves, you're going to see something like, let me change this one also to green. Right, we are using green for the short moves. So we have another short move here, down here, and the market goes all the way up here, comes down, go the way here, and come down. So we have these short moves all within the 50-minute. This is how complex the market looks. Right. So when you are a trader, your focus is not, if you are trading with the 50-minute, your focus is not on the 50 on the smaller time frame. Your focus is what is happening on the 50 minutes. But we just use the lower time frame to see the details of whatever that is happening. But your focus will still be on what? The 15 minutes, because the 15 minutes is what you want to look at, the main trend of the market, where the market is flowing up to, where the market is heading to. When you trade a higher time frame as your main chart, as your main market focus, and then you try to focus on the details on a lower time frame, you don't let the small moves deter you from the trade you find yourself in, or take you out of the trade you find yourself in. Because the small moves will tell you a different story, whilst the longer time frame trend will tell you a different story. So which of the stories are you focusing on? Your main focus is on the higher time frame story, but you just need a lower time frame to give you a more detailed idea of what the market is doing currently, so that it will help you to have a mindset that, okay, the market is pulling back a little bit or is coming back a little bit, but it will still go back to where it's supposed to go. So the market will never go this way. It will never go all the way down up like that. It will never do that. So when you're in the market and then you see the market pulling back on your position, or you take a buy trade and then the market goes high, you're happy. I'm in profit. I'm in profit. You see a market starting to go down, and your profit will be shrinking. Your profit will be shrinking. Since you've not closed the trade, the profit will be coming down, becoming smaller and smaller. It will be coming down against you. When you are scared, you say, "Oh, this trade, I'm tired. I'm just walking out." As soon as you get out of the trade, you close the trade, then you push up. Then you say, "Oh, I should have stayed in this market. I could have made more money." That is what happens. So you should be mindful and know that the market will always make this kind of moves when it is moving. So we have the general trend, and then we have the short-term trend in between what? The main trend. That is how the market flows every day. So keep that in mind. Well, let's look for something more nicer. I'll look at any question. Is it getting more complex or it's okay? Let's analyze gold. Gold. I like gold charts. Gold moves very nicely. Let's look at gold. I'll go to a higher time frame. That is the 1 hour. Let's look at this nice trend in gold. Gold have been moving down. The price of gold have been depreciating for some time now. It now looks like it's changing course for an uptrend, but it has been depreciating for a very long time, right? So the market moved all the way from here up to here. I'll draw this that way. It moved all the way to this place and then went sideways a little bit, took this low. Look at this low. Oh, no, no. It came a little bit below this low and then started pushing up. All right, let's see what happened in this down move. Let's look at the trend in this down move. It's a very nice trend, trending market down. So the prices of gold depreciated from here. It moved all the way. It made some, look at these moves, small downtrend moves. And then push all the way here, make a swing here, push down, make a swing here, push all the way down here, make a swing here, push all the way down here, make another swing, push down, make a swing, push down, and then now broke this line that I drew. It broke the line, test it, move this way, move up, move this way. All right. So I did it that way so that I could expand it. So move all the way down here. So let me put this one down here. The market went all the way up. All right. I wish I could delete the ending part, but I can't. So I'll just leave it like that. Okay. But our focus is the trend, the downtrend itself. So let's see what happened. It pushed all the way down here, came here. Oh, came here. Everything just changed because I tried to zoom in. No, stay where you are. Don't move. No, 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 no. All right, so let's look at it this way. All right, so let's see. So we have a perfect downtrend. The market move all the way down, pushing down, creating a lower low, 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 lower low. Now let's see how it broke all the lows. So we have BOS, break of market structure here. Break of market structure, market broke and create a new low, and then create a new low here. It took the low here and create a new low here. So this is our new low. So this low is lower than this one, so it create a new low. So the market went up, push down again, and broke the low. So keep on breaking these lows. Okay. Break this low too. Broke this low. Broke this low. And then it keep on like that. So break of market structure, break of market structure, break of market structure, and the market keep on pushing. So whenever it takes over the low, then we have a break of market structure. Whenever it takes the low, the current low, and create a new low, then we have another break of market structure. So that is how the downtrend moves, right? Now let's look at the uptrend. So this uptrend, when you go to a lower time frame, let's go to a lower time frame and see how complex it is. So this is a 1 hour chart. Let's go to the 15 minutes chart. So in the 15 minutes chart, something is happening here. You could see the details of the move, okay, how detailed it is. You see that there's the market move in between here, make some swing, went sideways, came here, pushed down, and then went up here, came down here, went up. You could see those small moves in between what the main move. Right. So if I'm to draw it, I want to go to 5 minutes so I can draw it more better. So let's look at it from the 5 minute chart and see the details of it. All right. So in 5 minutes, you see how we have a lot of zigzag moves in within the move, right? More complex, right? But our main focus is on the 1 hour. So we have a down move, but we have so many moves happening between the 5 minutes. So let's take just one side of the trend just and analyze it. So we have this side. I'm just going to take this short area and see what happened in 5 minutes. So in 5 minutes, we have this move. The market move down here and move the market move